right, I'm starting here on this screen because we've had a trade in KTOS for quite some time. And underneath this presentation, masterthantrading.com/live, you'll be able to see our entire portfolio of trades that we've shared in the free portfolio. So one of those trades is going to be KTOS. And KTOS was shared 0322. And what will often happen, especially with option traders, and for me, I'm an option trader, when we're bullish a stock, we buy stock. But when we get very, very bullish a stock, not only do we buy stock, we buy calls. Sometimes we buy calls over and over again because we want to be long combat drones. So we're long from 1728. We had this trade long from 85 cents that we've already gotten out for $1.70. And now KTOS is up 0417. Now these expire on the third Friday of July. So right now, with the movement of KTOS today, in our free portfolio right now, KTOS is trading at 2120. We've already closed these. So the 20 calls, July 24th, 20 strike calls are going to be right here. Right now, the market is $1.30 at $1.35. Let's take those off for $1.30. If you can get $1.35, great job, but $1.30 is plenty. Why are we taking it off? KTOS is up today. There's only 11 days until expiration. So after being down a little bit on this trade, even over the weekend, we were down 28%. Well, now we're going to be up 10% on this position. As far as the stock, I am bullish KTOS going forward. So I'd like to stay long that stock in our promotional portfolio. If KTOS drops down, we are going to definitely add and do some options with that trade. So we're just going to take off the options and hold that long stock. Congrats for those who nailed KTOS. Let's talk about advanced notice. Advanced notice is our unusual options activity tool. We had some nice upgrades to our unusual options activity tool. Now, sadly, right now, the tool's loading, so it's not working specifically right now. So instead of me showing you the tool, what I'm going to do is I'm going to share a very cool trade that I saw early last week. Let's look at Visa. Visa, 702. There was a $3.1 million trade in Visa. $3.1 million trade that's going to be right here on that 280 strike. Now, I'm a big believer in follow unusual option activity. We want to follow the biggest traders in the room. But also, when we see a trade that's 3.1 million, why are they doing that? Why do they want to get long Visa? Well, keep it simple. Look at this. Keep it nice and simple, okay? 200 period, moving averages. Wait on the edges. Think of yourself like a sniper, waiting for that perfect opportunity, because I have a hunch that's what they did with that $3.1 million Visa trade. Very, very cool to see. Now, am I suggesting Visa? No, I'm not. But what I want you to do is when you see a big trade like that, dig in deeper, see if you can find a reason why they're doing such a gargantuan trade. Divergence trader. Divergence trader just means when two assets move the same, we want to wait for a divergence. When that divergence comes, we could potentially see a trade. So we're going to be talking about pizza. Now, this isn't about the market, but I have to say, I hope this pizza looks good to you because I'm an East Coaster and somebody who's been in Chicago for the last 25 years. These guys have no idea what good pizza looks like. East Coasters, this is what good pizza looks like. But that's not the topic of this conversation. The topic of this conversation is the pizza industry. The pizza industry is dominated by 3 players. Okay? The 3 players right here. We have Pizza Hut. We have Domino's. And we have Papa John's. Now look at the size difference. Papa John's, Pizza Hut, $1.5 billion companies. Domino's, $17 billion companies. We really do love our pizza. What about the implied vol? Look at that Pizza Hut implied vol. Pizza Hut is twice as volatile as the other 2. That's interesting. It also trades with a historical volatility that's almost 4 times the other 2. Why is that? Why do people have a much better feeling about valuing Domino's rather than Pizza Hut? Why is that? Back on May 20th, and you can go on YouTube, just search for Jonathan Rose. On May 20th, I talked about Papa John's and Domino's. And this is the divergence trade, right? They move together. We have Domino's super strong, while Papa John's was really, really weak. Well, what happened since then is that they've both traded lower. Okay? So Papa John's has traded even lower, and Domino's went from being up 51% over this time period. Now it's only up 21% over this time period. So even though Domino's was way, way stronger than Pizza Hut, it was still getting way over its skis and looks like it's coming back. Hut. Pizza Hut is in yellow. Remember we talked about that Pizza Hut? We don't have to go remember. I can just take you back. Look at the volatility. Pizza Hut 4 times higher historically. The implied volatility is 2 times higher. But when I take you to that chart, it should be clear as day that you can see Pizza Hut, right? Of course, look how volatile it is. It's crazy. It moves all around while the others are moving together. This is how we look at divergences. Instead of just looking at one pizza company, we want to invest in the industry. We want to buy what's inexpensive and sell what's expensive. That's how we look at things in our divergence trade. Blockchain alpha. Now, blockchain, this is an awesome area to trade because you could treat this just like you would any other divergence. This is our divergence trader. And our divergence trader looks at any industry that we want. So we want to look at casino and gaming. Casino and gaming over 1 year. And we're looking at Las Vegas, LVS, Las Vegas Sands against Wynn. And you can see they have the same exact implied volatility, pretty much. Right now, Las Vegas Sands has a 33% volatility compared to Wynn as a 26%. But not only are they moving together, their volatilities are also moving together. This is pretty cool. Oil and gas, NE against VAL. Look at it on different time frames. If we go to the refiners, let's look at it over a year period. And we're looking at things with Marathon MPC, and we're looking at the relative value of each one of these to the green. So you'll see MPC, VLO is 88% correlated to MPC, PSX is 82%, Dyno, PBF, 80%. These are all refiners. So we can even take off some of the refiners if we want. Keep it simple. And let's say we just want to look at PSX. Get out of here, Velo. Why are you staying on? VLO, and a PSX. And you could just look at one against the other or look at all three. Now this is cool, but the divergence will work the same for crypto. And this is where crypto could be really cool because let's look at the meme tokens. If you're looking at meme tokens, you only want to look at meme tokens against meme tokens. So this is just looking at Doge against Shiba Inu. Now, we have the latest close, we have the gains. We're looking at correlations using math, but this is going to be difficult. Obviously, we don't have market caps, and we don't have implied volatility because there are no options that are traded on these just yet. Smart contracts, come here, and everything that we do is looking relative to one another. So smart contracts, if you're looking to do a trade, we value things against the alpha male, which for smart contracts, the alpha male is going to be Ethereum. We could look at just Ethereum relative to Solana. The Ethereum relative to Solana over the last 1 year. Solana is a competing blockchain. I'm just going to knock these off. We're going to look at Solana. And the idea with this style of trading, guys, is you want to buy what's inexpensive and sell what's expensive. That's crazy. Look at Solana relative to Ethereum over 5 years. Solana had its big jump, came right back down, got killed, and then has really been outperforming Ethereum ever since. So really cool and just a simplistic way to value something that many are just not so familiar with. Now, the cool thing about the products that we have is with my corporate partners, we have a full tech division that is constantly working on upgrading these tools. So our advanced notice tool, for example, our advanced notice tool, when we launched back in May, we only had end of the day data. And we assumed that we would have intraday data 6 months, 12 months down the road. Well, we already have intraday data for our advanced notice tool. This past weekend, our advanced notice tool allows us to now analyze the past 5 days of unusual option activity.
Join us every weekday at live.mastersintrading.com